Hey guys, and welcome to my YouTube channel. Thank you so much for joining me again on this Monday morning. So what I'm going to be doing every Monday is money talks, right? We're going to be doing money talks with Pelisa Sibayana. I'm very excited about it. It's going to be like a Money Monday type of a thing. So this past weekend, I was invited to speak at a breakfast show on SABC One called Mzansi Insider, and I really enjoyed it. We're talking about downsizing. However, obviously, because it was a live show, we were not able to actually cover all of the different things that I wanted to talk to and discuss. So I just wanted to continue the conversation on our Money Mondays. I will probably be doing this for the next month. Just the conversation around downsizing, right? It's the big word, the big D word, downsizing. What does downsizing mean? So, downsizing is usually used in an organization when the organization wants to see more efficient ways to be productive, to cut costs, and to increase productivity and the profit line. Remember, all businesses are in the business of the bottom line, which is profit. So downsizing is an exercise of evaluating whether everything is still working the way that it should, in order to increase efficiency and obviously to increase the bottom line. So that's what it is on a macro level, from an organizational level. But I want us to bring it to a micro level for us as individuals. What does downsizing mean for us, right? And what are the three things that I think that you should start to practically do to downsize? We're in a global recession, right? We're in a time that is what economists are likening to World War II type of economic conditions. So that is a very serious warning, guys. It's not a threat. It's not them trying to scare us, but it's a reality, right? It's a reality that we are in one of the most toughest economic times globally that we have ever been. And now, this one is not just an economic pandemic that we're facing, it's also a health pandemic, right? Which means that we're being hit from both sides, from a health perspective as well as an economic perspective. And obviously it's going to trickle down to so many other things that we're still about to realize as time goes by. So what I would like us to do, first and foremost, our president has called upon us to, exercise personal leadership at this time, which is critical, from a health perspective about where you go, how you, what you do in public, are you wearing your mask and so forth. That's your personal leadership. That's you being personally accountable for your health. And now I want to appeal to you guys to be personally accountable for your financial health, because now more than ever you need to watch your spending. Now more than ever you need to watch your debt levels. Now more than ever you need to watch your how you transact and when you transact and why you transact. Most importantly, the three things that I want to talk about is debt management, protecting your income, creating a will, and the fourth thing, credit. So first and foremost, with regards to managing your debt, guys, you need to manage your debt. You need to manage your existing obligations that you have. If you're in a place where your salary has been cut, you're unable to pay your obligations as you ordinarily would, please contact your lender. Speak to them. Have a payment plan in place. Don't just be like, okay, well, I'm not going to contact them and I'm not even going to pay. Because what's going to happen is they have a right to actually list you on ITC that you're a slow payer or you are somebody who's not meeting your applications, and that's going to affect your future ability to lend and to borrow money. So don't do that, guys. Speak to whoever you have existing obligations with and communicate with him. And I know right now that the prime rate is currently 6.25%, which is very great, because it's cheaper to borrow debt. But that doesn't mean that we should be taking up unnecessary debt. And what do I mean by that? Just because, let's say you work in an industry that your salary hasn't been affected by COVID-19, thank God for that, it doesn't mean now, because the rates are lower, you can go and buy an expensive German or car, or you can go and take out a furniture loan for, 30,000 rand. That's not what it means. When the South African Reserve Bank dropped the interest rates, they were trying to make it easier for consumers to be able to spend, to be able to meet their obligations, not for us to take on new debt. So guys, please do not take on new debt if you don't have to. Only if it's an emergency and you need to maybe take a loan or something, then do it. But don't get yourself in a trap whereby you are taking up new debt unnecessarily and putting yourself in a worse off position. So manage your debt. Speak to your lenders. Avoid payday loans. Avoid those small loans that you take up today and it's paid back on month and end, because what happens is those are high risk short-term debt, and what they do is they increase your risk at the credit bureau. And what usually then happens is that when you're trying to apply for debt that you actually do need, you are given a high interest rate because of these short-term loans that you keep doing. So avoid that as much as you can. If you can, pay up your credit card, right? The extra money that you have lying around now because you're not using it on entertainment or something like that, put that money into your credit card and start using your credit card as a debit card. What do I mean by that? I mean, if you've got a limit of 10,000 Rand in your credit card facility, but your salary that you earn is 15,000. When you get paid, take your salary, put it in your credit card so that it pays up your credit card, and use your credit card for all the monthly things that you do. You'll be amazed at how much you can obviously save, because remember, you're not going to be paying interest because all banks have like a 45 or 55 day interest free period on those funds. And what you're actually doing is that you are actually maximizing even on rewards that you'll be getting on a credit card. So use your credit card wisely. Don't max out your credit card and not repay it, because that's a very, very bad thing to do. Secondly, with regards to protecting your income, I think now more than ever, a lot of us have been exposed by COVID that we did not have all these insurances in place about debt, debt covers, debt protection plans, protecting your income, protecting your lifestyle, because we always feel like it's a waste of money. But now when we go through it, we actually realize the importance of those insurance policies. So if you can, I would advise you to speak to your financial advisor, speak to somebody with good financial acumen who can direct you to the right place where you can go to protect your income. Get an income protector in place to say, should you lose your job, should your business decide that they're retrenching tomorrow, at least you have an income that you'll be getting from this insurance policy that will be paying you on a month-to-month basis. This is critical, guys. And I think no one at this point can be comfortable to say, well, nothing's going to happen to my job, because we don't know what tomorrow holds, right? And number 3, get a will in place. And I know we don't like to talk about death. I know we don't like to talk about, passing on and leaving your family. But if you have children, if you have one child, if you have assets, I cannot stress enough the importance of putting a will in place. So again, speak to your financial advisor, speak to somebody who can give you the right advice as to how you can set up a will, how you can draw up a will. A lot of organizations actually even have free wills. You can actually keep your will for free with them. So to protect your children, to protect their financial interest once you pass away, because I've heard of people who had COVID. They were admitted in hospital on a Friday. They died on a Sunday. They were admitted in hospital on a Tuesday. They died on the Wednesday. So guys, like, COVID is so scary. It's so scary, and it can happen so quickly. So if you have children, if you're married, if you don't know what's going to happen to your children once you pass away, please put a will in place. Even if they're going to be going to mama or koko or your sister, just make sure that there's a detailed will that says exactly what you'd like to happen with your financial assets, with your children when you pass away. It's very important. Number 4, credit. Like I've already alluded to this, don't take on new credit at this time. It's not a wise idea unless you are buying like a long-term asset like a property, because it is a buyer's market at the moment, but you can afford it. Look, and hear me when I say this. If you could not afford to buy a house when the prime rate was 10%, you can't afford to buy it now. Okay? Can we just be clear? If you couldn't afford it when it was 10%, you can't afford to buy it now, because what you will do is you will latch onto the low interest rates, and once interest rates rise or something happens to your income, then you're going to be stuck with a property that you can't afford. So don't make any big credit obligations. Don't get into any credit agreements now that you could not afford when the prime rate was at 10%, because now the SARB has cut it down for our benefit, guys, not for us to again get ourselves stuck in a trap. So that's what I just want to cover for today's Money Monday talk. Comment, give me what your thoughts are. Tell me what you're struggling with. Tell me if you've got questions about how do I manage my debt. So next time we're going to get into budgeting, because that's a very important way of managing debt. I'm going to bring some financial experts who can help us about how to draft a will and the importance of those wills. So every episode that we have, I'm going to have a follow-up episode to it. So to make sure that you guys are informed, to make sure that you guys know what good financial decisions to make. financial education is not a luxury, guys. It's a necessity. We need to be financially educated. We need to know the right things to do at the right time. You get what I'm saying? So thank you for watching. Thank you for tuning in. Please comment, like, subscribe, and tell me what you think. Tell me what your thoughts are. Thanks for joining me on Money Mondays.